All right, what's up, ladies and gentlemen? Welcome back to the video, you guys. Today we're going to be going over how I just completed my phase 1 challenge with Alpha Capital. So I'm going to be going over the trades to show you guys how I got it done. But before we get into this video, you guys, I have to do a quick risk disclaimer and let you guys know that the information you are about to receive in this video is not financial advice, and it is for educational and entertainment purposes only to show you guys how I trade and how I pretty much use prop firms, you guys. So let's get straight into this video. All right, you guys. So you guys can see that the market is still open, right? The market is still open. It is currently 10:51 my time, so that is 11:51 Eastern time, right? Because I am on Central time. So I'm going to jump right into the price action today, you guys. Just pretty much giving y'all everything that I have on my chart, just breaking it down for you guys. I don't really want to toggle through the different time frames today, because if you guys go back and watch some of my old videos, then you guys can see exactly why I was taking the trades that I took today. You know what? Actually, I'm going to break it down for you guys one more time, right? Just one more time, because I know some of y'all probably didn't watch the previous videos, right? So I started on the weekly time frame, right? And if you go to the weekly time frame, this is the E-mini NASDAQ future chart. Even though I do use CFD prop firms like Funder Pro, Alpha Capital, and E8 Markets, you guys, I still like to use my futures chart. You know, the future chart is just nice and clean for me, and I just love to use it, right? And by the way, if you guys are going to go grab an account with any of those companies I just mentioned, be sure to use code TRUCKEN, link in the description below, you guys. So on the weekly time frame, we had this big bearish engulfing on the weekly time frame right here. You guys can see that this week candle right here, this big red candle, broke out the top and the bottom of this previous week candle. And then this week candle right here, we drove up into the middle of that wick, right? The middle of that wick on the weekly time frame, right? So we drove up into that wick a little bit, and then price going into this week, we kept driving higher and higher, but we did not take this out, right? So if I was a swing trader, my stop loss would look a little something like this, right? I would have been wanting to get in here somewhere, right? And I will be using the top of this swing as, you know, an entry, and then I will be targeting something all the way down here, right? So that's a 15 to 1 risk to reward as a swing trader, right? But that's not what I'm here to show you guys right now. What I'm here to show you guys is how I pretty much found my daily bias, and how, you know, I decided that I was going to be taking sales this week, right? Because all of this week we've been taking sales, right? So now as we drop into the daily time frame, we can see right here, you guys, on the daily chart, yesterday's we had a break above yesterday's I'm sorry, this big green candle right here is Monday's, right? This is Monday's price action. So on Tuesday we broke above Monday high, right? And as you guys can see, we didn't even get close to getting to Monday's low. So today we're pretty much going to expect that, since we already broke out the high, right? And we know that we're not likely to break out of Tuesday high, because this, if it's going to go all the way up there, it's probably just going to keep breaking out and going all the way up to the top, right? So where does that leave us? Well, that leaves us to only go one direction, which is down, right? And then you guys know I have this big red zone on my chart. That's the 4-hour order block. I can show you guys that right here. All right, on my chart, the 4-hour order block. It's on there somewhere. All right. I don't know where it's at. All right. Well, the 4-hour order block, we really don't need to pay that much attention anyways, because what I really want to show you guys is the opening range gap, all right? So the opening range gap is essentially what the opening range gap is. It is the price from a day's closing price at, I believe it's at 4:30, and then the opening price, which is at 9:30, right? And you can find the opening range gap at the bottom of your trading view. It's going to be like a hexagon or whatever type shape, and then you will go to regular you would go to session, and then you would go to regular trading hours, all right? And then when you go to regular trading hours, you're going to find a gap in the market, right? So this is this box right here, this opening range gap. I'm actually going to make it a different color. Let's just make it orange, right? And then I also had this opening range gap from Monday, right? And you see I got a label right there as well. We're going to make that orange as well, right? So the reason why I was looking to target this opening range gap from Monday is because if you guys go on your charts and, put these opening range gaps on your chart, you will see that we left this opening range gap open Monday, right? So whenever we leave a gap open like that, typically if it's a first presented fair value gap, if it's an opening range gap, if it's a new week opening gap, it really don't matter what type of gap it is. More times than not, when we leave that gap open, we're going to want to come back down into that gap. So today I was looking to target the midpoint of this gap right here, which is also near the midpoint of the new week opening gap from this week, right? So that was pretty much my target. So when the market opened, right, let's go to the opening price. And it looked like I may still be in, yep, I'm still in regular trading hours. So you guys can see this is where my new week opening. I'm going to switch back to electronic trading hours, right? Because I need to be able to see things properly. So let's go to when the market opened. I'm going to put a horizontal line at the 929 candle. So you guys can see right at the market open, we drop down, come down here, we make a first presented fair value gap. Then the market quickly rallies, right? And I did take a loss. This was actually my first trade. I tried to take a sell right from the first presented fair value gap and just target the midpoint down here. The risk to reward was great. But if you guys watched the video from yesterday, this is literally the same trade I took yesterday. And in that video, I told you guys it don't work every time with the first presented fair value gap. And that's why I don't trade the first presented fair value gap all the time, right? But at the time being, if I would have, because at the time being, I didn't even see this opening range gap. If I would have seen this opening range gap, I would have never taken this sell. I would have just waited, right? So I seen it a little bit too late. I was already in the trade. And then by then, the market came up. We put all the way back into this opening range gap. And then also first presented fair value gap, right? So this is why I tell you guys, use the first presented fair value gap. The first presented fair value gap is the first fair value gap after 931, right? So if you guys look at this big red candle right here, this big red candle opened at 930. So that means you're gonna wait for 931, and then the first gap right here, that's going to be your first presented fair value gap. Typically, I like to label mine as FP, FVG, and then I'll put the date on there as well. And sometimes you will see I'll put NYM, which just means New York morning, because sometimes I do use the first presented fair value gap for the evening session. I use it for the London session, and I also use it for the Asian session as well. But I'm quicker to delete those off of my chart than I am the New York morning session or the New York evening session first presented fair value gap. All right. So my second entry started to come from up here. At this point, I was down about 3,000 on my account from over leveraging. But as you guys can see right here, we just switched to the 5-minute chart. We had a little bit of a gap in here, you guys. A little bit of a gap in here. So as the market is coming back, right, I'm getting like literally just the most amazing risk to reward right here. Right? I mean, I would think I was, because at this point I was probably only risking about $700, right? And in hindsight, you guys can see that the trade did play all the way out. But the problem is when I'm down, 3,000, I'm just looking to get some of my profits back and protect my account. So that's what I did, you guys. But if we look at this trade, that's literally a 50-to-1 risk to reward. Now, I'm not trying to sit up here and, sell a fairy tale and say that, oh, this is the only type of trades I look for is a 50-to-1. It's not, right? I just told you guys, there's no way I was going to hold for that whole 50-to-1. It's just no way. Right? I wish I could be that amazing, but I'm just not, right? But I'm just showing you guys what, made me take this trade. I literally took this sell from the first presented fair value gap, right? So it's a little bit different from yesterday of how I use this first presented fair value gap, but I'm still taking my trade from the first presented fair value gap. Some of y'all who study in ICT, some of y'all don't even believe in y'all own zones, right? Y'all take trades on y'all trading view where there's no zone at. There's no order block, there's no gap, there's no nothing there. You have to, if you're going to use ICT concepts, you have to put some type of faith in these zones, right? And then on a 5-minute chart, we can also see, look how perfect these bodies closed. These bodies closed literally perfectly below the midpoint, right? So even if you don't get in all the way up here at the top, all you have to do is wait for a breakdown on the lower time frames, right? Let's switch back to the 1-minute time frame, right? Even if you don't want to get in all the way up here, right? Because you're scared, you're seeing all of this bullish price action. You're like, I don't know if it's going to go back down. Anything can happen. Just wait for a breakdown. As soon as you get this first presented fair value gap right here, I'm sorry, not the first presented, but as soon as you get this breakaway gap right here, then you can enter, and here's the market is going down, right? So it would have gave you some profits and then came back all the way back against you, which is a bit unfortunate, but that's also why you take profits as well, right? But you can also look at it as, as soon as the body closed outside of this opening range gap, the first touch back up into it, you could start selling right there and then ride that on down, right? So essentially, you guys, that is how I completed my phase 1 today on my Alpha Capital account. It was a bit of a swingy day, and I was over leveraging. I was down about 3,000, and then I went down 4,000, right? And then I was down 2,400, and then I pretty much caught this entire move, right? I pretty much caught this entire move, and then I rolled this thing all the way down, and then that had me up about 3,700 on my account. So I only needed about 27 more hundred to complete my phase 1. But then when we was down here, I started to do something that was stupid. I tried to start selling down here, hoping that we could just go 30 points lower, but of course it couldn't do it. So as we started rallying back up, right? Because I was in a sell, and I did take profits on the first sell, because I was actually I actually needed to make about 32 more hundred. And then I was in the sale. I made a little baby profit. Then as we was rallying back up, I thought we was just going to sweep this high right here and then come right down. So I was kind of selling right up here. But then we went much higher. And that was a little annoying, but I just pretty much put my stop loss in a place where I thought the market would not go. And then eventually it came all the way back down, swept this low right here. And that's how I completed my phase 1, you guys. So the point of this video is not to try to flex and say, hey, I had a 20-to-1 risk to reward or anything like that. The point of this video is to kind of give you guys a little bit of insight on my strategy. You guys see what I have on my chart. I have new week opening gaps. I have opening range gaps. I have first presented fair value gaps. Right? I don't really like to use too much more than that. I don't really care about order blocks that much. I don't really care about just regular fair value gaps that much, because from my experience, they don't really do what I need them to do. Sometimes you can get a nice scalp. You can get a nice scalp using those concepts, or you can use those concepts to read price as well. But I just don't really like the way price behaves in these areas, right? And an example of that is this 4-hour order block, right? We was in this 4-hour order block for literally 2 days. I mean, just look at how much consolidation we had in this 4-hour order block. It don't happen like that all of the time. I do think there was a lot of manipulation in the market this week with the government shutdowns. Trump always have to make a new tweet every day. But it's just still the point. It hung around there for 2 days. That was a bit abnormal. But essentially, you guys, that was pretty much my breakdown for today. If you guys enjoyed the video, make sure to leave a like. Drop a comment down below if you have any questions. And also, if you guys are going to go and make a purchase of a prop firm account with E8 Markets, Alpha Capital, Funder Pro, Apex, Trade Day, you guys can check out all of the companies that I'm affiliated with in the link below. And if you guys want to support this channel, make sure to use code TRUCKIN, and I will greatly appreciate that. And I will see you guys in the next video. Bye. Peace out.